Joining us now with more, Brett Feldman, who covers U.S. telecommunications, cable, and media at Goldman Sachs. Let's talk a little bit about their streaming business, on which they have made a very big bet. How does Disney Plus and Hulu, which they've now taken full charge of, or will soon, how do they fit together? And what is the pricing sweet spot? Because as Disney Plus has raised prices, they have lost viewers.
Yeah, great question. And you're right. In the coming months, the Disney will take full ownership of Hulu. They own 2/3 of it now, but Comcast has told them they intend to exercise their right to sell their 1/3 stake. So they're hashing out what that value is going to be. But they are going to end up owning all of Hulu pretty soon. They're in the process of trying to integrate the product now. The key question we have is, how is it going to make Disney Plus a better product? If you can go to Disney Plus and you can access broader content, including your Hulu content, that's the type of thing that could potentially make people stay more engaged with it. Churn is one of the most important metrics in the sector. You pointed out pricing has become very important. In fact, a key theme that we have seen over the last year from Disney, but also all the media companies, is to focus a little bit less on adding subscribers and a lot more on driving profitability. And they've done that mostly through price increases. And so we'll be looking for evidence as to whether this pricing strategy is helping the bottom line without scaring customers away.
Guest in the last hour, to sum up what he said, I think, and maybe Kelly, you can correct me, is the idea that maybe Disney has lost its content magic, or at least its content primacy among younger people. Agree, disagree?
Well, I think Disney would agree that they haven't done as well recently with their major films. And we've run this analysis. If you go look maybe the last 15 films that have come out, particularly those associated with major franchises, they've generally done 20 to 80% less revenue at the box office than we saw with prior installment of those films. And Bob Iger, as he returned to Disney about a year ago, made it clear that improving the creative output is of overwhelming importance. Mm-hmm. The challenge is you can't do it quickly. It can take 2 to 3 years to get a movie from an idea into the theaters. We've had a prolonged actors and writers strike. The writers are back to work, the actors aren't. And so I do think that's going to be a key focus area for investors, is how much visibility can we get from management around when they're going to be able to get these movies back into theaters, and what gives them confidence that the quality of their creativity is going to be back to the Disney standard.
You know what?
Go ahead.
I think that's exactly the question, Brett, and to what extent they're still able to capitalize on kind of their existing library, to what extent that represents an area of needed investment going forward.
Yeah, and there's been some debate around whether movie franchises, things we've had multiple installments of over the years, can still resonate with audiences. I don't think it's a question of whether people are still interested in franchises. I think what people are increasingly interested in is great entertainment, because the stakes are raised. We have so many options now. You don't have to go to a theater to see a high quality movie anymore. If you think about the last 2 years, 2 of the biggest blockbusters have been, one, Top Gun, which is part of a franchise, and 2, Barbie, which is actually a new narrative around a familiar character. Disney has more familiar characters in their content library than any media company in the world. So the ingredients are there. They should be able to do this. The question is, how long is it going to take?